Why Opendoor is suddenly in the spotlight over the past few weeks. Opendoor Technologies has captured headlines and the imagination of retail investors alike. The company, known for its disruptive approach to the real estate market, saw its stock price soar by over 100% in a matter of days. This meteoric rise has drawn comparisons to previous retail-driven stock rallies and sparked debates among market watchers. But why now? And what makes Opendoor so appealing to retail traders looking for the next big play? At its core, this surge can be traced back to a potent mix of optimism, speculation, and the power of online communities, with millions of retail investors sharing ideas on platforms like Reddit's, Wall Street Bets X, and Discord groups. At a moment when broader markets showed signs of recovery, and some meme stocks began heating up again, Opendoor found itself in the perfect position to catch the wave. Thousands of retail investors coordinated, shared screenshots, and hyped each other up to buy more shares. For many, the motivation wasn't only profit. It was also about being part of a movement that could shake the market and challenge Wall Street. It's risky, it's exciting, and it's rewriting the rules of what can drive a stock up or down. It wasn't about earnings reports or new product launches. It was about belief, community hype, and the age-old fear of missing out. Over the years, Opendoor has expanded into dozens of US markets, investing billions to buy, renovate, and sell thousands of homes annually. While the company is still chasing consistent profitability, its vision of modernizing real estate has drawn both praise and skepticism. Opendoor suddenly became more than just a real estate tech firm. It became the latest symbol of a retail investing movement that thrives on momentum and shared conviction. While Opendoor has always had potential thanks to its tech-driven, e-buying model, it's the timing of this rally that's fascinating. Founded in 2014, it pioneered the concept of iBuying, using data and technology to buy and sell homes quickly, often without the need for traditional real estate agents. But beneath that simplicity lies a complex operation powered by advanced analytics, forecasting, and market strategy. Instead of the months-long hassle of listing, staging, and waiting, Opendoor promises homeowners a near-instant cash offer and a simplified closing process. Back then, institutional investors, hedge funds, and large asset managers dominated daily trading volumes. But fast forward to now, and retail traders, individual investors trading from home are a force that can't be ignored. This technological edge positions Opendoor as both a real estate player and a tech firm, a blend that has intrigued investors since its SPAC merger in 2020. But the company also earns service fees, sometimes comparable to traditional agent commissions. The role of retail traders in today's market, but Opendoor's data-driven method aims to reduce these risks by constantly adjusting offers based on real-time market data. Investors are betting that as more people demand speed and convenience, Opendoor's approach could capture a significant share of the $2 trillion US real estate market. Retail investors have transformed the stock market in ways that traditional analysts could never have predicted a decade ago. The rise of commission-free trading apps like Robinhood and Webull opened the floodgates. Retail investors speculated it was undervalued, citing its cash position and potential in a rebounding housing market. The stock began rising steadily, drawing even more attention. Suddenly, investing wasn't just for Wall Street suits. It was for everyone with a smartphone and a few $100s. But it's not just the tools that changed, it's the culture. Earnings were steady but unremarkable, and there wasn't a blockbuster announcement. The rally was driven mainly by retail enthusiasm and coordinated buying, classic signs of a retail-led move. Online communities fueled by memes, humor, and a shared underdog mentality have turned investing into something social, almost like a game. Once a stock trends, it becomes a self-fulfilling prophecy. More traders, notice, jump in and push the price even higher, at least temporarily. This dynamic was on full display during Opendoor's recent rally. Understanding Opendoor Technologies. What is Opendoor? Isn't your typical real estate company. It was about perception and the collective power of thousands of individual traders, betting that Opendoor's story wasn't over. This model appealed to sellers looking for certainty and speed, especially during the pandemic when moving quickly became a priority. What makes Opendoor unique is its heavy reliance on data. Using algorithms and local market data, it aims to price homes accurately and flip them efficiently. Opendoor's business model explained. The company's business model is simple. On the surface, buy homes directly from sellers, renovate them if needed, and sell them for a profit. Here's how it typically works. Homeowners request an offer via Opendoor's app or website. Opendoor evaluates the property using a mix of automated valuation models and local expertise. If accepted, Opendoor buys the home, often closing in days rather than weeks. Renovation teams step in, making repairs and upgrades. The home is relisted on the open market for a higher price. Profit comes from the spread between purchase and sale prices, minus renovation and holding costs. This approach isn't without risk. Housing market fluctuations, renovation surprises, and local demand shifts can eat into margins. The result, a high-volume tech-enabled house flipping operation that's faster and potentially more scalable than traditional real estate methods. The recent surge, what happened? Timeline of the stock rally. Opendoor's recent stock rally didn't happen overnight, but it sure felt like it. Let's break down the key moments. Early June, the stock began attracting chatter on social media platforms. Mid-June, as mentioned, increased. Trading volumes spiked. Late June, momentum accelerated dramatically. Within days, Opendoor's stock price had more than doubled, hitting new short-term highs. Early July, media coverage amplified the surge, and professional traders started noticing the unusual volumes and price action. Throughout this period, no major fundamental news directly explained the spike. This timeline mirrors previous meme stock rallies, where sudden community interest sparks a wave of buying that feeds on itself. Key catalysts driving the growth. So what really fueled Opendoor's surge? A few factors stand out. Retail optimism. Many traders believed Opendoor was oversold, especially after a tough year for housing stocks. Broader housing data. Signs of stabilization in mortgage rates and demand gave some investors confidence in real estate recovery. Online hype, Reddit, TikTok, and X posts encouraged retail traders to buy shares, creating viral momentum. Short squeeze potential. Some speculated that high short interest could trigger forced buying, further pushing prices up. In essence, it wasn't about a new product, partnership, or earnings surprise.